Give me the quant angle on how we lift up well above 4,000. What's the quantitative place we're in right now that gets us out to a bull market?
Yeah, well, so we looked at a variety of signals. And first of all, narrow breadth is not a precursor for doom and gloom. So I just want to get that out there. That
Liz Ann Saunders agrees with that as Schwab.
Yeah, I think it's kind of a false negative. And then when you look at valuations right now, they look high, which is another reason nobody wants to buy stocks. But valuations generally look high when you're in an earnings recession, which we are in right now. And I think that when you look at the equity risk premium for stocks, it could actually go lower. And our call is the riskiest asset class in the world right now is the risk-free rate. Basically, Treasuries are the bubble. That's the epicenter of the bubble. Everyone's been buying Treasuries and pushing interest rates down to close to zero, and now we're working through that. But if we are in this sticky inflationary environment, do you really want to be in cash or bonds? Don't you want to be in stocks that participate in inflation? So that's our call. And I think that stocks are kind of, reviled right now because everybody's worried that we're going into a recession. Think about it. We've been positioning for this recession for like 6 quarters, right? So we're now at a point where the average money manager or individual investor is mostly in defensives, more overweight defensives and cyclicals than we've seen since 2008. So I feel like this is another setup for a cyclical rally. 4,300 isn't that far away from where we are today. So we're not being, heroes in terms of the cap-weighted benchmark. But I do think that you can make money by owning some of these unloved cyclicals that aren't necessarily going to get roiled by, what looks to be, not such a bad recession. I mean, our economists are basically forecasting 0.8% peak to trough declines in GDP. Not bad.